So you're having your first six-figure year, which is so exciting, but somehow your bank account keeps bouncing between feast or famine. What gives? Here's the thing. You're not broke, but you're just tracking the wrong numbers. Today, I'm breaking down the difference between sales and revenue and why knowing the difference is critical to your business success. I'm Brandy Gar. I built one of the top wedding planning firms in Orlando, Florida, scaled it to a team-run business, and now I coach wedding pros from all over the world how to build a profitable, scalable business that doesn't burn them into the ground. If you're only tracking booked weddings every single month, you're probably overestimating how healthy your business actually is. And that's why so many wedding pros hit total burnout with nothing to show for it. So the first thing we want to talk about is the difference between sales and revenue. So many wedding business owners get this confused, and I get it because we weren't taught how to track these things. And so the fact that you're tracking either one of them, if you are, give yourself a clap, a high five for that, because a lot of times we tend to bury our head in the sand and not want to track this at all. So you really don't have any idea what the financial health of your business is. So if you're tracking one of them, kudos to you. What I want you to do from here is to be able to understand the difference between sales and revenue and to track both, because together they're going to give you a really good picture of the financial health of your business. But not only that, they're going to help you to forecast when you're going to have some of those famine months so that you can prepare in advance for it and not get caught not being able to take a salary for yourself. So sales is the total value of an event. So let's say that you book a wedding today that's worth $6,000. It's a $6,000 wedding. You book it today. It's not happening until sometime next year. The sales value is still that $6,000 because that's how much you booked this month that you sold it for, right? So it's the total value of that booking. Now, the difference with revenue is the amount of cash that actually hit your bank account this month. So let's say that you take payments in equal thirds. So given this same example of a $6,000 booking, the revenue on that booking in this month is only the initial payment that you took of $2,000. So sales numbers show your potential, but revenue shows the truth. And the reason that we say it like that is because sales is so exciting. You definitely want to have big sales months because that's obviously going to grow your business. But the revenue that hits your bank account each month is the truth. It's what's actually going to be able to cover your expenses, including that salary that you've built in for yourself as the CEO. If you're feeling like the economy is causing you to constantly get ghosted and need to consistently drop your prices just to get bookings, I have some news for you. It's not the economy, it's your sales strategy, and I'm here to help you fix it. I created a brand new free training where I'm going to share the exact strategy I use and I teach to thousands of wedding pros who have been able to double their wedding bookings in less than 30 days using this strategy. It's called the Assume Method, and if you're not using it, you're leaving thousands of dollars on the table. Whether you're new, struggling, or ready to hit your next six figures, this training will change the game for your business. So let's talk about why tracking only sales is actually dangerous for your business. Let's say that you've hit your first $30,000 in bookings in 1 month. This is so exciting. We want to celebrate that. That's a great number. However, only $10,000 of that $30,000 is actually going to hit the bank account this month. Now, if your expenses are $12,000, including that salary for yourself as the CEO, then you don't have enough to cover your expenses for the month. So here we are celebrating this $30,000 sales, but we actually are still negative in our bank account. And that's why you are not taking a salary this month, because you're like, well, I guess there's not enough left over for me to pay myself. And then that happens again next month. And then that happens again next month. And all of a sudden you start to feel this burnout feeling where you're like, I don't understand. I keep selling and I keep selling, but why is there never enough in the bank account for me to actually be able to take that salary that I built into my budget? The reason is because you can't spend the booked income. You can only spend what actually comes in cash collected. So understanding that $30,000 was your sales, but $10,000 was your revenue is imperative to understanding the financial health of your bank account. So now let's talk cash in the bank. So this is where we get our hands dirty when we're working with wedding pros inside of Wedding Pro CEO. I absolutely love helping business owners to understand the difference and to really see how much money is coming into their bank account every single month. The coolest part about tracking revenue and sales separately, but tracking them both, is because they can give you the full financial picture when you lay them over each other of not only what's happening in current time, but what's coming up in your business. And this is something I see so often in the wedding industry, is that we don't understand how to forecast what's coming in our business. So every month you're kind of just like hoping enough money hits your bank account to cover. And you're kind of always waiting for that shoe to drop, right? I don't know if you've ever felt that way, but you're waiting for that shoe to drop of like, is there going to be enough this month? Can I actually pay myself this month? Is there going to be enough left over? And that's really not a good way to run your business. It's not a healthy way, and it's not a sustainable way to run a business, because at some point you have to know how much you're going to personally be able to take from your business every single month to pay your personal expenses like a mortgage, vacations, internet bill, whatever it is that you're contributing to your household. You kind of want to know what that money is going to be consistently in your business. So this is why we track both revenue and sales separately, but then lay them over each other to be able to understand what's coming up in our business. So what do I mean by that? Inside of Wedding Pro CEO, we work with our students on exactly how to understand and forecast what's coming up in their business financially. So that means what we do is we go into your business and we pull out the numbers of all of the expected income month by month in your business. So what this looks like is you're going to go into your CRM or your Excel spreadsheet, wherever you keep payments that have already been contracted, and we put them in month by month. So we're sitting here in April, May of 2025. If you want to do this exercise yourself, what I would encourage you to do is go into your CRM, wherever you keep payments, and I want you to go month by month, and I want you to see how many payments you're expected to receive that month already from booked weddings. So this would be second and final payments, or however you take your payments. You're going to want to go May. Okay, how many payments are coming in for May? If I didn't sell anything else, how many payments are coming in for May? How many for June? How many for July? And I want you to write that down. That's telling you how much revenue is coming in if you don't sell a single additional wedding for the entire rest of the year. Okay, so that's going to be the first number that we're tracking. That's your revenue. Now, the second number that we're tracking is we want to go in and say, how much do I think I'm going to sell each month for the rest of the year based on history that I have in my business? Now, if you're less than 2 years in business, this is going to be a little bit harder for you to come up with. So you're going to have to just kind of estimate based on your lead flow so far. But if you've been in business for more than 2 years, you should be able to go back in prior years and pull sales history month over month. How much were the value of the bookings that you sold in each month? That's what I want you to do. I want you to go for the rest of the year, and I want you to, based on history or lead flow if you're newer, I want you to estimate how much you're going to sell in each month for the remaining months of the year. Okay, so now you've got your revenue that's already on the books, you've got your sales, and the final piece of this is you're going to take 1/3 of your sales number for each month, and you're going to add that to your revenue. Now, I'm using 1/3 as an example because in my company and what we teach inside of Wedding Pro CEO is to do a 3 payment plan for most clients. If you do a different payment plan, that's totally fine. Just make sure that you're putting that accurate number in. So if you do 4 payments for your clients, make sure you're only putting that 25% retainer into the revenue bucket. So we've got our revenue of weddings that are already booked, payments that are coming in if you don't sell anything else. Then we've got our sales number, how much we're actually going to sell each month. And then we've got the retainers from that being added to the revenue. This is going to give us a really accurate forecast of how much we can expect to make every single month for the rest of the year. Now, the only step left to doing this, if you're like, okay, Brandy, this is all really great, but like, how does this tell me if I'm actually going to be able to cover my bills every month? The last step of this is to just compare that to what your break-even number is. So your break-even number is what it costs you to run your business every single month with all of your expenses, including a salary for yourself. So whatever that break-even number is, if it's $5,000, $6,000, $10,000 per month to pay all of those expenses, you want to just compare every single month. Is the revenue that's expected to come in for that month more or less than your break-even number? If it's more, great. That's exciting. That's a bonus. If it's less, that's okay. We just need to know either one, we need to actually sell more than we're expecting to that month. We need to figure out, can I increase my lead flow? Can I run some sort of a promo that's going to get me more sales that month? Or can I reduce expenses somehow? Can I look and see if there's any expenses that I can reduce for that month? Or my favorite is if you have a few months that are over and a few months that are under, now you know in those months that are over, that's not extra money. That's not you taking an extra distribution or going out and buying a new camera or computer. You need to store up that extra in those bigger months, like a little squirrel with their acorns, so that you can keep it in your bank account for those months that are going to be slightly lower, so that you don't ever have to skip a payroll. You don't ever have to skip paying yourself. You've now flattened out your revenue, which is so exciting to not feel like one month I'm eating filet, the next month I'm eating ramen, right? By knowing these numbers and being able to take from the big months and put into the lower months, you can see it coming. You know you're not going to have skip payroll, and it makes running your business so much easier. You guys, trust me that I know this pain. Many years we ran our business in this feast or famine cycle, and I can vividly picture my husband and I standing in our living room together, honestly, me in tears one summer, because summer's our slow season here in Florida, and honestly desperately wondering how, one, we were going to cover payroll, but two, how we were going to possibly pay our mortgage, because both of us work full-time for our business. And that was the last time that ever happened to us, because my husband was like, I can't continue like this. Like, businesses don't run like this. Like, this can't be right. There has to be a way that we can figure out how to flatten this out. Like, so we don't have to skip payroll every summer, because there's no way that business owners just skip payrolls for months on end. And so that was the last summer that ever happened, because that was the year that I kind of hit total burnout in my business. And I went and I just said, I've got to figure this out. I went outside the wedding industry. I learned a ton about how to run a profitable, sustainable business. And I brought that back into the wedding industry. And now that's what I love to teach wedding pros how to do, is to learn how to understand revenue, understand profit, understand sales, and to build a profitable, sustainable business that you actually love to run. If this episode hit you in the gut a little bit, CEO, good. That means you're ready to start running your business like a real business. Drop the word revenue in the comments, and I'll send you the exact tracker we use with our students so that you can do this exercise too. And if you want to learn more about how we help wedding businesses scale to 6 or 7 figures, click that link in the description below and book a call with our team. And don't forget, CEO, you can't scale what you don't track. So stop measuring hype and start measuring what matters. I'll see you in the next one.